Hello and welcome to yet another Equity for Keeps video. Today we'll bring to you Alphabet Inc. Recently it reached the $1 trillion market capitalization, and before that, a few days before that, that was expected, and a few articles were written in the newspapers in that regard. At the beginning of 2015, according to what is written in one of the editions of the Financial Times, the consensus 5-year earnings per share growth for Alphabet was 18%. That figure has dropped to 15%. But even as that growth rate moderated, Alphabet's valuation has exploded. Its forward price to earnings ratio is now a whopping 28 times, compared with just 18 times half a decade ago. Still, that 50% rise is lower than the jump for Apple and Microsoft. And then, yet in the same edition of that newspaper, we can see what is written there by Richard Waters in their San Francisco bureau. He has it that Google's success is in positioning itself to become the biggest beneficiary as global advertising and marketing spending has moved online. Advertising continues to account for a significant majority of Alphabet's sales, and the Google division brings in 99.6% of company revenues. Ambitious long-range projects such as driverless cars and new drug discovery have yet to see a payoff. The company, which started the past decade with revenue growth of 24%, is expected to report that sales were still growing by nearly 20% as the decade drew to a close. Even though at more than 160 billion, they are more than 5 times the level of 2010. So the analyst at RBC Capital Markets has it that 10 years ago, I don't know anyone who thought they will still be growing at 20%. And then they went on to add that Alphabet starts the decade under new management. Hopes for another phase of growth have been moved beyond advertising. A group of businesses that include the Play App Store, cloud computing, and hardware sales already make up 16% of revenues. So some of the people that have written pointed out that at the beginning of 2015, the consensus 5-year earnings per share growth for Alphabet was 18%. To that figure rose to 15%. And then, yes, obviously, the earnings are dropping, or have dropped in relative terms. And but obviously, the Alphabet's valuation has exploded. Yes, its forward price to earnings ratio is now 1.28 times compared to just 18 times. Yes, with the price explosion, the forward price earnings ratios will most certainly rise, because the price has escaped and the earnings has not caught up with it. So let's dive in and see what the charts and what the data says about Google. Now notice that the ticker GOOGL is for the parent company. That is the one that has the 1 trillion market capitalization. So if you try the other one, GOOG, it wouldn't give you this 1 trillion market capitalization. So in the past 5 days, this is what has happened. It has added about $31, and its 52-week range, obviously you can see there, is between 1,027 and 1,450. Average volume is 1 million So it trades about that will be up to 1 billion or more on the average in a day, and it has a short interest of 1%, and shares held by institutions is 79%, and outstanding shares is 346.1 million, and market capitalization is 1 trillion. Market capitalization issue level large cap is 502 billion. Okay, thanks for watching. We will continue to provide you more as regards Google.